If you are a therapist in private practice and considering establishing a business entity, such as an LLC, then today's video is for you. We are going to discuss all the ins and outs of business entities for therapists. I'm Dave. I'm a financial planner and founder of Turning Point Financial Life Planning, where we use the tools of financial planning to help therapists lead more authentic, balanced, and abundant lives. If you're new here, please be sure and click on that subscribe button. All right, so in today's video, we're going to talk about why you might want to establish a business entity like an LLC. We'll talk about the various options available to you as a licensed therapist, and we'll also give you an overview of how to ensure that your business entity continues to protect you and remains in good standing. This is a bit of a longer video. There is a lot of good information to cover here, so without further ado, let's jump in. All right, so before beginning, one very important note. I am not an attorney. Only properly licensed attorneys are authorized to provide you tailored legal advice. What we're going to cover today are general concepts, general ideas that will help you better decide whether you'd like to further investigate establishing a business entity for your practice. If you need advice for your particular situation, I'd really encourage you reach out to a qualified corporate attorney in your area, specifically in your state. All right, so let's first take a moment to discuss why you would even consider forming a business entity in the first place. So the first reason here is arguably the most important. Certain business entities, though not all of them, create a legal shield for your personal assets. So the classic example here is if someone is visiting your place of business and they slip and fall and injure themselves, you are ultimately sued as a consequence. If your business is conducted through a business entity offering limited liability, then that business entity itself becomes the defendant in the lawsuit. That means only the assets owned by the business entity itself can be used to fund any damages which are ultimately assessed. In contrast, if you conduct business without a business entity, in that case, you would be personally named as a defendant in the lawsuit, which unfortunately that means if you're found liable, you could be forced to use or sell any of your personal assets with some limitations. So assets like vehicles, your home, investments, those could potentially have to be liquidated to fund the damages assessed against you, a situation we'd obviously like to avoid. The second reason you might consider a business entity is that it does offer you some additional options for managing income tax. I'm going to defer most of the details around that to a subsequent video where we'll delve into business entity taxation. But for now, just remember that certain business entities will offer you some flexibility around taxes. But importantly, there is no automatic tax benefit you would receive by simply establishing a business entity. Said another way, there's no clear tax disadvantage to not form a business entity, if that makes sense. Kind of a double negative, but hopefully you get my meaning. The third and final reason that I hear some people considering a business entity is that it would provide a place to house a unique brand name and assets that you might create, any intellectual property you might develop. So absent a business entity, you just operate your business under your own legal name, whatever your name is. In contrast, you can name a business entity pretty much anything you feel like. Further, if you down the road choose to sell any branding, a brand name, or the intellectual property you develop to a third party, having a business entity to sell might make that transaction a bit easier to complete. Now, there certainly there's validity to these ideas in this third bullet point, but if branding and a separate brand name outside of your own legal name is your primary concern or your primary reason for considering a business entity, completing a doing business as or DBA filing, that might be an easier option for you to consider. Similarly, housing assets for sale in a business entity it's not required. You could personally own the assets and just sell those assets directly. Or equally, you could transfer down the road those assets you developed into a business entity. You could do that in the future. Now, that type of transfer would likely require you to use an attorney, but if you're working on selling your business, you're probably going to be working with an attorney already anyway. So I think the bottom line here on this branding and housing of business assets issue is that there is certainly that is an advantage of forming a business entity, but if it's the only or the primary reason you're considering a business entity, it might not be justified. The work that's required is maybe not justified, the benefit. Anyway, if you're unsure about this, I would again suggest that you check in with a local attorney. Okay. Now that we know some of the reasons you might want to form a business entity, let's discuss what the heck a business entity is. As we hinted at on the previous slide, it's a legal structure, and you create that legal structure, and it owns the assets of the business, and you conduct all of your business activities through that entity. So you are in effect creating a distinct legal person. Okay, what the heck does that mean? Well, for a moment, let's think about the opposite situation. If you don't create a business entity, that means from a legal point of view, there is no distinction between the business and you personally. You personally are entering into, for example, a rental lease or collecting revenue from clients. All the activities, all the money between your business and your private life is all mixed together. There simply is no distinction between the two areas. In contrast, certain business entities create a distinct legal entity, which you can think of as a distinct person in a sense. In this case, as an example, you are not personally entering into a rental lease. The business is. If that lease isn't paid for some reason, the business entity is responsible for the unpaid rent, not you as a personal individual. To continue this rental lease example, when your business entity entered into that lease, you were still probably the one who signed the lease agreement. And when you signed that agreement, that document, you weren't actually signing as you, the individual. Instead, you were signing the lease as an authorized representative of the business entity. Okay, so this is confusing, but this is an important distinction to keep in mind. You are not signing the document and putting yourself personally on the hook for paying the rent. You're signing as a representative of your business. Okay, now this next point is a really critically important one for licensed professionals like therapists. A business entity creates a liability shield for many purposes, but business entities will never shield you from professional liability. What professional liability means, that encompasses the actions that you take as a licensed professional in your state. So any malpractice claims that might be made against you, the business entity will never create a legal shield for you personally for this type of liability. Now, this situation isn't unique to therapists. It applies to any licensed professional, including therapists, of course, but also professionals like doctors and attorneys. So, as a consequence, it is super critical that you keep your malpractice insurance up to date, regardless of what business entity you use. One final note is that all business entities are created under state law. So that means there are 51 different sets of rules and regulations and fees. So that's every state and then the District of Columbia. Yes, this is a headache, and it makes things even more confusing. And just to throw one more complexity on the pile here, if you complete an interstate move, be sure and think through the impact that has on your business entity. So for example, if you move from California to Oregon, for instance, your business entity, it does not automatically change from a California to an Oregon one. You'll have to complete certain filings or potentially even create a new entity to ensure it remains valid and a benefit to you. So an interstate move is another situation where it really makes sense to talk to a good corporate attorney. All right, so let's move on to a discussion of the different types of business entities themselves. There are 4 flavors, I like to call them, of different business entities, so we'll discuss each in turn. The first option is the sole proprietorship. To call this a business entity is a bit misleading, since it really isn't a separate business entity at all. A sole proprietorship, which you'll also hear called a sole prop, is how your business is automatically classified if you create no formal business entity at all. So if you just start doing business one day, you're automatically a sole prop. And as we've mentioned earlier, that means all of your business and personal assets and activities, they're all intermingled. Any liability that results as a consequence of your business operations, that becomes a personal liability in the sole prop world. The second option is a partnership. So a partnership is analogous to a sole prop in that if more than one person enters into a business together, a partnership is just automatically created. There's no formal action required to create a business entity like a partnership. It just happens almost magically. What is, though, a little bit different about a partnership relative to a sole prop is that you can create formal legal agreements between the partners that stipulate how the partnership is to be run and governed. And in fact, these types of agreements are a really good idea. Partnerships are not super commonly used within the therapy world, so we won't spend a ton of time here, but it is an option that is technically available. Similar to a sole prop, in a partnership, there is no legal liability barrier between you and the business entity. You're just personally liable for everything the business does. But a further wrinkle in the partnership model is that you are also fully personally liable for the actions of your partners in addition to your own actions. And now, so this is clearly a big disadvantage of the partnership business structure. And to address that limitation, quite a few states offer what's known as a limited liability partnership. This is abbreviated as an LLP. So you may have seen those. They're reasonably common. But the really critical thing to keep in mind with an LLP, a limited liability partnership, is that it only shields you from personal liability for the actions of your partners. You remain completely liable for any actions that you take yourself. So it's still kind of really like a sole prop in that regard. There is virtually or very limited liability shielding from the business aspect to your personal life. One final note here, taxation of partnerships are also particularly hairy. They can get complicated really quite quickly. So be sure and work closely with a qualified tax professional if you're operating as a partnership. So on to the third business entity option, and that is the limited liability company, or LLC. Now, this is probably the one that you've heard most about. They are popular. Now, an LLC, unlike a sole prop, unlike a partnership, it is a fully distinct legal entity, and as a consequence, it may shield you from personal liability, and we've talked a lot about that. So the LLC is the first business entity that offers you that liability protection. To create an LLC, you'll have to draft legal documents and complete the filings required by your state. You'll also have to pay annual filing fees, and in some states, like California, there is a fairly low income tax that is assessed on the LLC net earnings itself. Now, LLCs are the simplest business entity to form that offers limited liability again, so that's why they're so popular. All right, let's move on to the fourth and final option for business entities, and that is the corporation. So similar to an LLC, this is a distinct legal entity, and therefore it does provide a shield from personal liability. Also, like the LLC, it requires drafting of formal legal documents, and you'll also have to complete state filing requirements. The annual filings and filing fees are, like an LLC, required for this corporation entity. So in many ways, LLCs and corporations are similar, but corporations are definitely higher maintenance. They have a bevy of corporate formalities which are required, including creating a board of directors, and that board must hold regular meetings, and those meetings must be documented with formal minutes. Now, this requirement applies even if you are the only member of your board. One last point on corporations, and this is a difference between corporations and LLCs. The default tax treatment for corporations is that they owe their own income tax. Under current federal tax law, corporations pay a flat 21% income tax. And in addition to that, they often pay state income tax. So the corporation is paying income taxes, but in addition, you as a shareholder will also pay income tax on any profit distributions from the corporation to you. Now, these distributions are called dividends, which is something you may have heard of. This unfortunate tax characteristic is known as double taxation, taxed at the business entity level and then taxed again at the individual level. That's when the dividends are taxed. Now, that doesn't mean corporations are always a bad choice from a tax perspective, but it does mean that it's something you'll want to carefully think through and consider. Okay, so those are the 4 different flavors of business entities, but that is not quite complicated enough, right? So unfortunately, we need to throw in an additional wrinkle here. And this is a wrinkle that is specific to therapists or specific to licensed professionals. If you are practicing therapy through your business entity, as you know, that activity is regulated and licensed by your state government. And many states, not all, but many, require that licensed professionals conduct business only through certain types of business entities. These entities are called, fittingly enough, professional entities. So check and see if your state requires you to not just use an LLC, but rather a professional LLC, which you may see abbreviated as a PLLC. But not every state, unfortunately, allows professionals to use LLCs at all, and California is one of them. In California, if you as a therapist want to form a separate business entity for your private practice, the only option is a professional corporation. Now, you could still operate through a sole prop or a partnership, but if what you want is a business entity that offers liability protection, then as a therapist in California, you'll need to form a professional corporation, and that's sometimes abbreviated as a PC. To say just a little bit more about both the professional LLC and the professional corporation, you'll want to check with your Secretary of State's office or their website and see if your state requires to use one of these designated professional entities. While you're there, you'll also want to check into the naming requirements and also business activity restrictions. What the heck am I talking about there? All right, so first, the naming restrictions. Many states require that certain language be included in the business name itself, such as licensed therapist or something of that nature. In addition, often professional entities have restrictions on the types of activities in which they can engage. So that may take the form of stipulating that a certain percentage of the business entity's activities must relate back to the licensed activity. So, for example, if a substantial portion of your business revenue comes from coaching rather than licensed therapy, in that case, you might need to house the coaching activities in a separate business entity because that is not a professional, licensed, and regulated activity. I know, all of this can be a real bummer. And one final point, if you discover your state requires a professional business entity, as we've been describing, but you've been using just an ordinary non-professional business entity, don't panic. You can change this. It usually isn't that big of a deal, but it is something you want to go back and correct as soon as you possibly can. This situation, again, would be a really great time to work with a qualified corporate attorney in your state. Your Secretary of State's office also should be able to help you navigating correcting this business entity establishment. All right, so we've talked a lot about how LLC and corporations offer liability protection. But there are a number of things that you need to do to make sure that the liability shield remains in place. There are, in fact, situations where if you don't follow good corporate housekeeping procedures, a court may disregard the business entity and still hold you personally liable. This is a situation known as piercing the corporate veil, and we do not want this to happen to you. So, what do you need to do to make sure your corporate veil isn't pierced? First and foremost, your LLC or corporation must have its own bank and financial accounts. This is absolutely 100% critical. Similarly, please don't intermingle personal and professional purchases. If it's a personal expense, always use your own personal credit or debit card. If, on the other hand, it's for your business, use a corporate credit card or debit card that's linked back to your business checking account. Now, it's fine on occasion to use your personal bank account to purchase something for your business. Just make sure that your business goes back and reimburses you for that. But the opposite is not okay. Please never use business accounts to purchase something for your personal life. Following this rule will not only protect you from liability and piercing the corporate veil, it will also make your bookkeeping so much easier. Another really important element is to use the business entity name on all client agreements and contracts. It's important to make clear to those with whom you're doing business that they are working with a business, not with you as an individual. A related point is to use that LLC or corporation descriptor when referring to the business entity. You want to make it clear to everyone that they are doing business with a business entity, and that business entity has limited liability. And that's what putting that LLC or corporation descriptor means. That's what it communicates. So put that descriptor everywhere you can in marketing collateral, email signatures. You get the idea. You will also need to perform all requisite corporate housekeeping. These include annual state filings, and for corporations, holding those board of directors meetings and keeping minutes of those meetings. Finally, you should also carry the appropriate amount of liability insurance for your business. Now, the idea here is that you should still be able to compensate others for any actions for which you're found liable. The courts do not look kindly on simply hiding reckless behavior behind a corporate shield. So carrying appropriate insurance coverage is one important way that you illustrate that you are being a prudent business owner and not a reckless one. All right, so that's it. I hope you found today's video helpful. It was a lot of information. So please let me know, did you find that avalanche of information helpful? What made sense and what points are still confusing to you? And equally, are there any other matters that you'd like to view a similar video about? You can always let me know through email. I can be reached at dave@turningpointhq.com, or I'd be happy to sit down and have a complimentary, no obligation 30-minute virtual meeting with you where we'll simply discuss whatever financial matters are on your mind. So thank you again for watching, and I hope you have a great remainder of your day.